Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to your personalized deep dive. You've handed us a fascinating stack of sources this week. I mean, it really feels like the perfect storm, doesn't it? We've got global trade, corporate crypto moves, and this crypto rally kicking off.
It really is. And the sources are pretty clear. For the first time in a while, it feels like these big external factors, the macro stuff, the geopolitics, they're really steering the ship for Bitcoin.
Yeah, directing the prow of Bitcoin, as one source put it. We've seen new highs recently, sure, but the real story, the why, seems much deeper than just price charts.
Exactly. It's about connecting those dots.
Okay, so our mission today is to cut through that noise. We want to connect those dots between, say, tariff talks, corporate confidence, and this renewed market optimism. Basically, figure out what's driving all this recent activity you flagged for us.
Sounds like a plan.
So let's start with the immediate trigger, the macro data. What sort of gave the market the green light to, well, run?
Right, well, that seems to be the October 24th inflation data release. Now, the headline number, the overall CPI, it showed a tiny increase, 0.3%. Barely anything, really.
Okay, so not exactly earth-shattering inflation news then.
Not the headline, no. But the core inflation figures, that was the key. The consensus in the sources was that the underlying data, stripping out food and energy, actually looked great for the U.S. economy. Things like energy services, medical care commodities, prices were actually down there.
And that little detail, that was enough to completely shift the mood? Because the sentiment change you highlighted was fast, like really fast.
Yeah, it's quite something, isn't it? A real psychological shift. You had the crypto fear and greed index. It was down in fear territory, hovering around 28.
Right, pretty bearish.
Very. And then after that data, it just vaulted up, hit neutral at 42 pretty quickly. It's like a clear signal that those immediate fears, the big liquidation worries that always hang over the market in bad times, it evaporated.
And you could see that shift in the money flows too, right?
Right.
Especially the ETFs.
Absolutely. Confidence returned and capital followed, mainly into Bitcoin. On that same day, the 24th, you saw inflows of about $90.6 million into Bitcoin ETFs.
90 million, wow.
Yeah, it's significant. Now, Ethereum ETFs, they saw small outflows, around $3.6 million. But the big picture was the rush back into Bitcoin. Investors are clearly feeling ready to take on a bit more risk again. And, Bitcoin is often seen as the first stop, the relative safe haven in digital assets.
Okay, so short-term fear fades, optimism creeps in, tied to this economic data, but also looking ahead to global trade, right? That brings us to the next big potential catalyst, those tariff negotiations, the ones still hanging out there.
That's exactly where the sources point next. And what's really interesting here is how tariffs are being used, not just as a stick, but more like leverage for negotiation.
Right.
So the biggest thing on the immediate horizon is that meeting scheduled for October 31st. President Trump and the president of China talking tariffs. The market seems to be pinning a lot of hope on that meeting for clarity, for some kind of stability.
And the feeling is that whatever comes out of that will set the tone for the next few months.
That's the expectation, yeah. Less volatility, maybe a clearer price direction if they reach some kind of understanding.
But before we even get to the U.S.-China showdown, there was already some major movement out of Southeast Asia, the ASEAN Summit in Malaysia, hosted by Malaysia. Let's unpack those trade frameworks that came out of it, because they seem crucial to this current rally.
They really do seem to be the engine right now. I mean, besides the notable geopolitical achievement of brokering that peace deal between Cambodia and Thailand.
Which is significant in itself, of course.
Definitely. But for investors, the real takeaway was the concrete new trade deals hammered out with 3 key ASEAN nations.
Okay, let's break them down. Because, why should someone watching Bitcoin care if Malaysia lowers tariffs on, say, aerospace parts?
It's about predictability. It's always about predictability, isn't it? So take the U.S.-Malaysia deal first. The agreements were very specific, quite surgical. Malaysia cut or even eliminated tariffs sometimes down to 0 for certain U.S. sectors. You mentioned aerospace, also pharmaceuticals, rubber, key industries.
And in return,
Malaysia committed to slashing tariffs on almost all U.S. exports going the other way.
So the U.S. leverages its market, maybe the threat of tariffs, to get better access and more reliable supply chains.
That's the pattern. And you see it again in the U.S.-Thailand framework. Here, the U.S. kept a 19% tariff on Thai exports generally, but Thailand agreed to remove barriers on 99% of U.S. goods coming in. That includes big ones like agriculture. And interestingly, they even agreed to accept U.S. vehicle standards.
Vehicle standard, that feels like a really granular detail for a major trade framework.
It does, but it shows how deep these talks went. It basically means easier market entry for U.S. cars, less red tape. It all contributes to that long-term economic certainty everyone's looking for.
Okay, and Vietnam?
Similar story with the U.S.-Vietnam framework, focused on tackling those tariff and non-tariff barriers, giving U.S. industrial and farm exports better access. The specific U.S. tariff rates on Vietnamese goods, though, those were still listed as pending in the sources.
Got it. So these ASEAN deals, taken together, they cover a huge chunk of trade value. What was it, like 68% of $475 billion? How does smoothing things over in, say, Bangkok or Hanoi lead to Bitcoin going up?
It boils down to certainty, reducing friction. The strategy seems to be about building resilient supply chains, maybe with some anti-China elements baked in, but the effect is reduced geopolitical tension in the region.
Less tension, less risk.
Exactly. And that trade de-escalation immediately sparked this risk-on rally we saw. It fueled the Bitcoin pump, pushed that sentiment index back to neutral. That's the short-term kick.
Okay, that makes sense for the immediate reaction. But what about the longer-term picture? What fundamentals do these deals actually build?
That's the really crucial part, I think. Analysts cited in your sources expect this to provide sustained support. It's about that enhanced investor confidence filtering through. And think regionally. Countries like Vietnam and Thailand, they're already huge centers for crypto adoption globally.
Right, massive user bases there.
So if their trade flows stabilize, if they get better access to the U.S. market, that generally means more economic activity locally, that can boost local investment, increase cross-border payments and remittances.
And potentially drive more stablecoin usage.
Precisely. More volume, more real-world utility. So geopolitical stability in these key adoption hubs can directly translate into increased demand and use cases for the assets we're tracking.
That link feels very solid. Okay, so we've laid out the macro and the geopolitical drivers. Let's pivot now to the institutional side, more ground level. If certainty is flowing back into the broader market, what are the big players, the institutions, doing? How are they signaling confidence?
Well, the biggest signal recently has to be SpaceX. We know they're the fourth largest private company holding Bitcoin, and they just moved a massive amount.
Yeah, the number was huge. What was it again?
$133.7 million worth. That's 8,285 Bitcoin.
8,000 Bitcoin. And it was moved in a couple of chunks over just a few days.
Right.
If that was a traditional company moving assets like that, you'd definitely raise an eyebrow.
And you absolutely would. And this is the critical detail the sources emphasized where it went. It went to a new internal wallet, not to an exchange address.
Okay. So not prepping to sell.
Exactly. That signals continued deep conviction from a major institutional player, Bitcoin as a long-term treasury asset. When you see a move like this, it's almost always about upgrading security, maybe moving to a more robust multi-sig setup, better cold storage. It's about consolidation, protecting the assets for the long haul, not liquidation.
That's a powerful signal from the corporate treasury side. But then we have this other narrative running alongside it, the sort of grassroots freedom tech angle. That came up strongly at the Plan B forum in Switzerland, you flagged.
Yes, exactly. The Plan B conference, which is pretty much the global hub for, Bitcoin maximalists and the hardcore decentralized finance crowd, it really highlighted this counter-narrative to traditional finance.
And the example was Rumble, right? The YouTube competitor.
Right. Rumble partnered with Tether. They're introducing Bitcoin tipping for their creators using a platform called Coiner.
Okay, tipping in Bitcoin.
Yeah.
What's the underlying philosophy there, according to the sources?
It's framed as a step towards the separation of money and state, empowering creators with true financial independence, basically allowing income streams that centralized players like payment platforms or banks can't easily block or control. It's about creating permissionless ways for people to earn money.
Permissionless, that's the key word.
Yeah.
Because at the exact same time, you had the traditional banking system trying to do the opposite, right?
Yeah.
Trying to bring this tech inside their walls, but in a controlled way.
That's the fundamental tension, isn't it? It defines this whole market cycle. You saw Vantage Bank and Custodia Bank teaming up, forming a consortium. Their goal, a nationwide rollout integrating tokenized deposits and stablecoins into the traditional banking system.
Using a specific platform.
Yeah, a patent-protected framework from a company called Kosheri, built on their blockchain platform.
Kosheri, which is generally known for more permissioned institutional applications, right?
Exactly.
Now, your sources seem pretty critical of this whole bank consortium approach.
They were, and it really cuts to the heart of the whole decentralization debate. The source argued this move creates a permissioned system. They basically defined a permissioned blockchain in this context as just being like proprietary software controlled entirely by the banks.
So if the banks control who participates, who validates all the rules, then what's the actual benefit of using a blockchain versus just, a fancy shared database?
That's precisely the critique. They essentially said, look, if you're building a closed system run by a central authority, you might as well just use Microsoft Excel or some legacy software. There's this historical allergic reaction, as the source put it, within the open blockchain community to these kinds of consortiums.
Because they bypass the core idea, the trustless, decentralized part.
Exactly. They bypass the very philosophy that makes Bitcoin and similar projects appealing in the first place. So yeah, this battle between open, permissionless freedom and closed, permissioned control. It's far from over.
That's a really crucial dynamic for you, the listener, to keep tracking. Corporate adoption of Bitcoin as an asset versus banks trying to tame the technology for their own controlled systems. Okay, finally, let's look at regional innovation. There's some serious stuff happening in the Middle East that bolsters the long-term tech story.
Definitely. Saudi Arabia is moving incredibly fast. They're pushing hard to shift from oil towards a knowledge-based economy. You saw their Enium-backed AI company, Humane, partnering with the F1 Institute just ahead of that big Future Investment Initiative event.
And the goal is explicit. AI leadership.
Global AI leadership, yes. Okay. And they're building the tech to back it up. Humane is developing LAM, aiming for it to be one of the most powerful Arabic large language models out there. This isn't just talk. They're investing heavily in capability.
And it's getting noticed.
It is. Saudi Arabia is now ranked 15th globally for AI innovation and #1 in the Middle East. This whole pivot, it requires massive tech infrastructure, and often things like blockchain and tokenization get pulled into that ecosystem build-out.
Right. Meanwhile, just across the water in Dubai, The DMCC, the Dubai Multi-Commodity Center, is really cementing itself as a hub, especially for Chinese tech, it seems.
Yeah, the DMCC, which is one of Dubai's huge economic free zones, hit a milestone. 1,000 Chinese companies are now based there, and the growth is rapid 16% growth just in tech firms over the last year.
And they're actively recruiting in specific areas.
Absolutely. The sources mention DMCC holding roadshows focused specifically on AI, blockchain, and tokenized assets. They're positioning themselves as that bridge, that launch pad connecting East and West for innovation.
And the scale is serious, economically speaking. This isn't just symbolic.
Not at all. DMCC brings in something like 15% of Dubai's total foreign direct investment each year, contributes about 7% to the GDP. And it fits into a bigger picture. UAE-China trade hit $12 billion last year, and they expect that to double by 2030.
So that growth provides a real economic underpinning for the digital asset infrastructure they're building out in places like Dubai.
Precisely. It adds legitimacy and shows real-world economic integration.
Okay, so let's try and synthesize all of this. We've covered macro, geopolitics, corporate moves, philosophical debates, regional tech. What's the single most important takeaway for the listener right now based on these sources?
I think it's twofold. Short term, the market's direction seems heavily tied to geopolitics, specifically trade clarity. The ASEAN deals provided a boost, and now all eyes are on the U.S.-China talks. That's the immediate driver.
Okay, and long term?
Long term, the fundamentals are being strengthened by that institutional conviction we see from SpaceX and by these major regional tech pushes, like in Saudi Arabia and the UAE via DMCC. Those build the foundation.
And layered over all of it is that core tension we discussed. The decentralized, permissionless ideal of Bitcoin versus the banks trying to create their own permissioned, controlled versions using similar tech.
That's the defining battle, really. It's going to shape how this technology evolves for years.
Absolutely. And for right now, as you said, the immediate focus is the 31st, the U.S.-China meeting. We saw how positively the market reacted to the ASEAN news.
We did. Asian markets rallied, crypto rallied. Clarity is clearly valued right now.
So here's the final thought for you to consider. If those U.S.-China talks do bring more clarity, more stability, what does that actually unlock?
Yeah.
Is it just enough to push Bitcoin past its all-time high again? Or does that level of geopolitical certainty trigger something more fundamental, a new wave of institutional money finally feeling safe enough to come in?
That's the multi-million, maybe multi-billion-dollar question, isn't it? Definitely track that announcement. In today's world, geopolitical clarity might be the most valuable commodity there is.
Fantastic insights as always. Thanks for walking us through this complex web of sources. And for everyone listening, be sure to send in your next batch of materials and we'll break them down in the next deep dive.